Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, June the 17th. Wanted to take just some couple minutes of your time. Going to discuss what happened in markets last week, really what's driving markets this week, and where we see markets moving from here. And last week was a nice strong week in the markets. The S&P 500, the major index that we use as investors as a benchmark, was up over 0.5%. The small and mid cap indices were up more than that. Again, being in the leadership positions as they were out of favor last year, continue to be leadership this year. But one of the interesting things that we saw last week was it was definitely a growth week over the value week, and up so far year to date, we've really seen the value trade go and be the leadership. But last week was definitely a growth week in the markets, and you saw some catch up there. Now they're still halfway to where value is year to date on the returns that you're seeing in the market, but a nice, good, strong week for growth. So for all of you that are invested in growth stocks and growth ETFs and growth mutual funds, you saw a nice, solid week last week. And as we head into this week, markets really stayed pretty flat, pretty muted, right around the flat line for the week. As we were heading into the big Federal Reserve meeting that took place over Tuesday and Wednesday, with comments coming from Chairman Jay Powell yesterday. And one of the things that was very interesting that came out of the Fed meeting yesterday is the Fed had indicated for many months that they had zero plans to raise rates through 2023. Now they indicated at least one rate hike in 2023. And what they said was that inflation is running hotter than they expected, but they are going to allow it to run hot to average out 2% over a long period of time. But reminding everybody that they do have a dual mandate of not only dealing with inflation, but employment as well. And the employment numbers, as Chairman Powell indicated yesterday, aren't quite where they want to see them yet. So they're going to continue to keep rates low and be supportive of current policy. But one of the things they also said is they signaled the end to the monetary support that they've been giving over the last 14 months in the marketplace. They've been buying mortgage-backed securities at very large rates for the last 14 months, and they indicated some potential tapering of that as we continue to see economic recovery. So that presents itself a very challenge to investors, especially if you're in the fixed income market. If you're in the fixed income market, you know that rates in the future are moving higher, and what that does is it really lowers the value of the bonds that you currently are holding now, as they're going to pay more as if you were to buy them a year from now, 2 years from now, in rising interest rate environments. As well as it presents its challenges for equity investors, is who are the companies that are going to be able to weather the inflationary storm, meaning who can pass off these higher costs to their consumers, to other businesses, it doesn't hurt their margins as much. A lot of these large growth names that perform very, very well in deflationary environments struggle a little bit in inflationary environments because of the cost of capital. They have to pay more for capital, and it eats into their margins that are already razor thin, as they're not generating a lot of profit yet as they're in the growth stage. So again, this is kind of points to a very importance of stock picking right now in this current market. Is stock pickers and understanding which equities to pick are going to do you better than just passive investing during this time frame as we're trying to navigate through this. So if you have questions about what's going on with your individual portfolio, how to navigate through this current environment that we're going through, just feel free to give us a call. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks.